So in today's session, we will discuss what is rational analysis, and then I'll go over the technical analysis of stocks and market charts. And in between, I'll tell you what are the top tasks of trading, how I do it. Maybe it helps you in analyzing the stock and taking the trade, etc. All right, so we begin. So yeah, we all know trading is the hardest way to make easy dollar. So trading is the hardest way to make easy dollar. Once you know the art of trading, it's an art and science. Once you know, it becomes easy. In the beginning, it's hard. So if you're just starting now, it's a long way to go, but you will eventually get there if you are persistent. So don't give up, keep learning, and you will eventually get there. And then easy dollar comes every day. So briefly, I want to tell you about what is rational analysis. So we know technical analysis, we know fundamental analysis. So technical analysis, we look at all the charts, data, prices. Fundamental analysis, we look at all the fundamentals of the company, such as their sales growth, earning per share, the cost of the, manufacturing or cost of services, etc. And then we come up with whether the company is good for investing or not. So in between is called, when you take technical analysis and you take some part of the fundamental analysis, and then when you combine it, it's called rational analysis. So it's when you do that, you have an edge in your trading. So it's very important to create an edge in the trading. Whether you're looking at the chart, or whether you're looking for the stop, or whether you're looking for the exits, or you're trying to come up with the trade ideas, look for the edge. Do you have an edge? So the edge comes when you combine the fundamental with technical. So for example, there's the company is very good fundamentally. It has a sales growth, revenue is increasing quarter by quarter, and everything is good in the company. And then you look at that company from the technical point of view. Where is your buy point? So once you understand the fundamental, or you just read a report online, there are many reports you get for free. You don't have to subscribe to any paid services, but if you want, you can subscribe to paid services and get the report. And don't buy it, don't buy the stock just based on the report. You apply the technical analysis. So, and then wait patiently. So when you wait patiently for the proper buy point, and then you enter the trade. So you combine fundamental with technical, becomes rational analysis. So that's where the most of the money is. So look for the proper buy point based on what you know that this stock will move. But are you buying at the overbought level, or you're buying it at the proper support level? So that's called rational analysis, when you combine fundamental and technical analysis. Now, the top task, trading task, I'll explain a little bit here. Some steps go before stocking the trade, which are not here. I'll discuss later. Some steps go after you update your trading journal when the market closes. But this is the meat of the top task, trading task. So I'll explain this, and then I'll talk to you about the chart, so you will have a better idea. So the best trade, suppose the market is starting right now, is 6:30 a.m. Pacific. The best trade comes when you stop the trade. You are not an impulsive trader because you have been stalking the trade. You are not a momentum trader. Momentum trader are good as long as the momentum is there. The moment the momentum dies, the trader doesn't know what to do. So everybody can be a momentum trader. Find a stock which is at momentum and just throw the dart, and wherever it sticks, that is your buy price. And then after you buy, the momentum trader doesn't know where to exit, and that's where he loses the money. He doesn't know where is his stop, where is his exit, and then he comes on a Facebook and asks, The question goes like this: any thoughts on ABC stock? Any thoughts on XYZ? Because he doesn't have his own thoughts. So he is looking for the thoughts of others. So don't be like that kind of trader. Any thoughts? Those are the worst trader. So stop the trade. So how do you stop the trade? You prepare your watch list. And when do you do that? You do that before the market opens. At night time, before going to sleep, you spend 1 hour, 2 hour, have a basket of stock, then go through the stocks. You don't have to analyze 8,000 stocks. You can analyze 300 top stocks, whatever is your criteria. I have my own criteria, and I go through the stocks quickly. It takes me about 1.5 hours to go through. So I filter them, and I'm looking for 30, 40 stocks. Sometimes it depends on the market conditions, what the market did before last 2 days. If the market has pulled back, I will get more stocks to stock. If the market is moving up, I will get less stock to stock. So it works the other way around, not the way people think that if the market is moving up, you get the more stocks. No, because a lot of the stocks have already moved up. So if they have already moved up, you cannot chase the stock. So you need to get in at the ground floor level. And how do you define the ground floor? It's where that the technical analysis comes. The ground floor is where you think the ground floor is. For some people, the ground floor may be the fifth floor, but it's not the ground floor. Is they are missing out that they are fourth floor, third floor, second floor, first and ground floor. Maybe sometimes there is a basement there. So that's where the skill comes. So you think it's the ground floor, but there is a basement. So prepare the list before the market opens. So I get ideally my list is 35, 40. Sometimes I go to 65, 70. So it's okay. Then during the day, when the market opens, or before even the market opens, I look at, I sort them based on the net change price. So if the market is, let's say I prepared the bullish setup. I only have a bullish setup, some few bearish setup. So currently the market is in a bullish mode. So I want the art stack in my favor. So I would look for the bullish stocks, bullish setup. So let's say it's pre-market, 5:30. I come 1 hour before market opens. I see, oh, this stock is gapping out. This stock has some activity. So out of all this, 3 or 4 stocks looks like a good candidate. So I filter them. I separate them in a different basket because they are my high priority, and I watch for the my open position, how they are doing. So combine all that, what the market is doing, etc. I set up. I'm ready for 6:30. As soon as 6:30 a.m. Pacific, the bell rings and then the stock starts moving. So I start uh, finding the familiar setup. So familiar setup. When I look at the stock, I can I see it. I see, I've seen this is set up. I saw it last night. I'm seeing it now, and I've seen it 2 weeks ago. I've seen it 3 weeks ago. It doesn't matter if the stock is cat, dog, donkey, whatever it is. This stock has just a name. It's just a stock. It has nothing to do with me. So is it Apple? Is it Facebook? Is it Baidu, Baba? Whatever it is, it has the same pattern, which I have recognized before, and I know it works. Then once I know that, then I visualize the path in my based on the experience. I visualize the path the stock will take, where it should go, how it should travel. If it's a bullish stock, how it will take its path towards where I perceive it to go. So I create a map. So this goes in my brain. I create a map of the stock. Sometimes the map is simple map. Sometimes it can be a complex map. The stock can go up one step, comes down 1.5 step, then again move 2 step, then come down, then up, down, where I will eventually exit from all my position. In between, there will be stops, pit stops. So will I take 1/3 here, second half here, 2/3 here, or should I dump all in one shot? What is my potential? So all this goes in immediately in the brain, and then comes the result. The result is this: feel good about it. Do I feel good about it? If I feel good about it, about the result which I perceive, then I will pull the trigger. If I don't feel good about it, I will just move on to another one. It may be, the next one. The next one could be the one which is not moving right now. So I should not give up. So half an hour pass, I don't find anything. I'm just sitting, watching my open position, or the market is dull, or some news is coming up. The Dow Jones is up 56 points, and somebody is going to jail. The market is now negative 40. So I don't feel good about it. So I say, okay, I don't feel good anything about any stock. I just sit tight, and I may go home, meaning I close and I just set my open position target and stop, and I just do something else. Or I wait patiently and find something, some other stock, find same process, find the familiar setup. I visualize the path, I create the map in my brain, whether it's a simple map or complex map. I feel good about it. Yes, I feel good about it. So when I feel good about it, then I say, okay, what do I do? Should I buy shares or buy options? Options available. The spread is there, normal. When is it earning coming up? Where is the support? Where is the resistance? Any other news? Open interest, etc. All these things goes, and then I say, yeah, I feel good about it, and I pull the trigger. So when I pull the trigger, this is where I should not hesitate. This is where I should not send an email to my buddy asking for his opinion, or something else. Someone will tell me what to do, because this should be very, very easy, pulling the trigger. So pull the trigger with confidence. So there should be a word, pull the trigger with confidence. So with confidence word is missing here. So pull the trigger with confidence. Then once you pull the trigger, you see, you check your order. Is it executed? Yes, it's executed. Is it properly executed? Did you intend to buy calls and not puts, and you bought puts? Did you buy 10 contracts instead of buying one? You were supposed to buy one. You didn't look at it. There was a zero after one, and you bought 10 contracts. So do all that. Once you know everything is done, then you set your stop loss and your target. So either GTC order or day order, whatever you do, the exit orders are supposed to be GTC order. The buy order is supposed to be day order. So then you monitor the trade, and let the trade go through this path, the map you have defined, the path and the map you have defined. The trade is going through this map. It could be a simple map, it could be a complex map. So now it's like a guided missile going through its path up and down, and you manage it. Once you manage, you either take profit or you take loss. So whatever happened, you either take profit or you take loss. So in either condition, you should feel good about it. The way you felt good about it here when you are pulling the trigger, you should feel, this is the second stage of feeling good about it. You should feel good about it here also. So this is step, feel good about it, is missing here. So you should feel good about it. Either you take profit or you take loss. Because if you don't take loss, you will never be able to take profit. So be very quick in taking losses, and do not worry about it. Take loss, quick, 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 and profit will, profit will build up. So whatever is the condition, profit or loss, you pat your back. You say, okay, I did whatever I can. I stocked the trade. I find the familiar setup, visualize the path. I created the map. I was feeling good about it. I pulled the trigger. I monitor the trade. I did everything what I can, the best I can. And even if it didn't work out, okay, it's fine. I move on. So when you move on, before you move on, you update your mistakes journal. So there should be a mistake journal where you write down all your mistakes. Whatever was the mistake. The mistake could be you ignored one of the rules in your trading. So you have a rule book, like, right? So the rule book, A, B, C, D is all the way to Z. There are 26 rules. A to Z maybe 26. Yeah, so 26 rules, and you forgot to check rule number C. So if you don't follow your rules, so that's your mistake. So you write down your mistake and say, okay, if this trade did not work, probably because I did not follow rule number C. So I will never do that. And this mistake cost me this much money. So what is a mistake and how much it cost you, either in terms of loss or in terms of profit, because it can happen both ways. You were supposed to take $300 profit, you ended up taking only $150. So why it happened? You became greedy, you didn't see the exit, and you thought this stock will was accelerating at that time when you wanted to take a profit, but you cancel your GTC order and the stock reversed to pull back and pull back, pull back, pull back, and the profit of 300 became 150. And then finally you said, okay, I better lock in this 150. So you take that 150. So that $300 gain became 150. So you write down $150 loss in profit. And the mistake, what mistake? So all mistakes are coded. So at the end of the month or year or quarter, you have a total of all your mistakes. So this mistake, mistake number C, rule number C, I did not follow, and I lost $2,000 because of not following this rule. So at the end, you will notice that if you eliminate all your mistakes, your profitability will go up, sometimes as much as double. So if you make 5,000 at the end of the month, you could have made 10,000. And there's another journal, trading journal, where you update your buy price, your sell price, how much you bought, and what you did sell at, what, how much you sold at, how much price, what was the price, whether you followed your risk management. So there's a risk management process involved here in this. Actually, the risk management is here before you pull the trigger. You should know how much you need to, how much you will be buying. So your process should tell you immediately before you even pull the trigger. You should know how many contracts you will buy, how many shares you will buy, whatever it is. Based on your portfolio, there are different models. So you need to, it depends what is your model of risk management. You apply that, and that's where you update. So, and then there are other steps after that. I'll talk sometime later. So this is the trading task. Are you listening? How do I get sound? You get sound. Maybe your volume is not on. So are you guys listening? I think so. Nobody is complaining about the sound. Yes. Okay. Thank you. So update your trading journal. Now I tell you some setup. Some are in progress and some are set up for next week. So if you had attended last week's webinar, you would see a lot of them moved according to the direction I gave you in the stock. So it pays to come and attend. It's all free. So Apple, and it takes time for me to prepare all that. It takes time mentally and be ready. I'd rather be doing something else and I'm teaching. So I'm glad you are here. There are about 61 of you today, kind of 50% attendance. I announced late because I came last night, late night. I came around 2 o'clock. So then I said, okay, I'll do the webinar here. So sorry for late invitation. Anyway, so look at this chart of Apple. It's 11th of September, 10:31. So I went long on this on the basis of this Apple long. I think there was a news, so I took my chances. I said, okay, this is a bullish candle. How much I would lose? I would lose here. So I defined my exits here based on this support level, and I said, okay, I rather go long on Apple, and I went long, and I sent the alert to members, and this is the path Apple is taking. So where is my exit? So I exit. So remember so I visualize it and I felt good about it. I visualize the the path it will take. Is it a complex path or a simple? So it's not a complex path. It's a simple that I expect that it will go up towards this trend line. So it depends how long it takes for Apple to move up. The longer it takes, the longer is the target. If it moves up fast, suppose it boom go up, then this is the target 231 because it covered the distance fast and hit the trend line. So if it does that in one shot from 224 to 231, it's how many points? 7 points. If it moves 7 points in one shot, I'll take profit and exit and wait for next trade. So I will stock it again. But if it goes slow like this, up, then this trend line, then this can go further higher and higher. So it could be 235, 237. So it depends what kind of path it takes. So here's my exit here, and right now here's my exit 231 and above. So I still have Apple. This is Abbott. I showed you, I think, on last webinar, Abbott. So I mentioned this is a hammer candle at support. So if I draw this upward sloping trend line, so you need to know how to draw the upward sloping trend line. Once you draw that line, then you come up with the 65 support. So this is what I showed, and this is what I did. So it moving up. I did not prepare the chart, I believe, for it Abbott for 14th today, but I think it went up. So simply based on this hammer as a support, and the path is I think it crossed 67. So if you look at uh, Friday chart, you will see Friday I was in Yosemite Valley and I did not have internet. I did not prepare, and I came last night, so the chart for Friday is missing. So it crossed, Abbott crossed. This is Adobe. I showed you the chart of Adobe for last week. So what I said, the 50-day moving average is the support. There is an upward sloping trend line. It's a double support. It's the same price point. So it was a good buy at this price. And this is what it did. I'm showing you the path. So visualize the path, create a map. So created the map, and boom, it went up. It's now 275. So the entry, where is the entry? So now I would not buy Adobe if I don't have it. I do have it in my long-term retirement account, way long. Here, these are the stocks I have, like Apple, Facebook, Adobe, Autodesk, Home Depot, Lowe, etc., Nvidia. So I would wait for swing trading. I would wait for Adobe to move back down towards 270, 268 level. If it does, and then I feel good about it, so I will stock it. I will find the familiar setup right here at 268, and then I will feel good about it, and then I will feel the path to move up. I know the 275, this is the resistance level. It's a minor level resistance, not a major, because the stock just came here first time. It's not bumping its head like it's here or here or here or here. It's just clear path. So this is uncharted territory. So this is another traders get confused and they don't know how to do that, how to create the path when the stock is trading in uncharted territory. So if a stock is trading where it has traded before, it's very easy to calculate the path. The map is simple. So you have gone there before, you know how to get there from home to work, work to home. But if you have not gone to, suppose, Timbuktu, you don't know how to get to Timbuktu. So you will create, it's a complex map. So you will take time to create the map and then you will follow it. So this stock is going to Timbuktu. It has never been there before. So where it will go, you have to, that's where technical analysis comes, and then you apply that and figure it out where it will go. So, but ideally, I will buy here somewhere on the pullback, 268 level. AIG. So AIG chart is 14th of September. So this was prepared. Actually, I asked someone else to prepare for me. So this is, look at this one. Uh, this is the support line. This connecting the support, the trend line can be connected by connecting the low point. So suppose if you are, there are two ways to connect. Connecting with the low point, low point. But the ideal, the right way to create a trend line is to take the closing prices. So closing prices or open price, not the low, not the wicks. So avoid the wick. So if I take this, I drew the line. Here is the upward sloping trend line. And here's the downward sloping trend line for AIG. So in other words, so what this AIG is saying, it is sandwiched in between the support and resistance. So I have seen this chart 10,000 times before. I know what it does, and I'm feeling good about it on Monday. And when I will feel good about it, I will feel good about it when it breaks this line. So there is one resistance here. I can see clearly. I can see clearly there is one resistance here. I see clearly this is another resistance. So I know where the stock can bump its head. This is the clear resistance zone. You see the zone. So the zone is, the resistance zone is not the one price point. People say, okay, the 56 is the exact resistance. So it could be, but it's the zone is here. This is the zone. So the zone is where the zone is, the resistance zone is where the suppliers were. So the supplier, well, Ravinder, I have not sent any. This is just for explanation. So I haven't signed any Adobe about an AIG trade yet. So we are just discussing AIG 14th of September. So here, so I know this is the resistance here, right? I see the resistance here. And so this is the zone, supply zone. So this is the supply zone. So the supply zone is actually the resistance zone. So when AIG was trading in this zone, there were sellers. So that's why it's a supply zone. So this is a supply zone. And here's a minor supply zone. Here's a minor supply zone. So I'm stocking it right now because it's 14th of September prepared. I'm stocking it. I am waiting for it to break this resistance line. And if it's break, I will feel good about it. And especially if it breaks 54, and then I will get into it. And then I'll see what it does at 55. If it doesn't move, um, or get stuck between 55 and 56, I'll just take my profit. This is not an ideal, like a wow kind of setup, but sometimes the setup is not wow, and then it become wow later. When then we say, "Damn, missed that one." So it's just on my radar watch list. This one, ALGN, prepared the chart on 10th of September. So it's bumping its head. I keep showing you 50-day moving average, how the stock sits on 50-day moving average. It tells you clearly that it has a support. So 50-day moving average, when it becomes like a giant hand, um, like they created one recently in Vietnam, in the park, and it's like one giant hand holding the bridge, or two of them. So this is like a giant hand. It's holding ALGN and it's a 50-day moving average giant hand. And below that is another support. So when you see this, this is your watch list, stalking. So you stalk it, and then when you see the move, you get in. So this is what happened here. So I did not get in. I don't have it. I did not send any alert, but this is what happened here. 10th of September. We cannot trade everything. So this is just for example's sake. I was watching it, but I did not get in. And see what happened at 372, 390. So the moral of the story is that keep watching. And when you find the familiar setup, take action. pull the trigger and feel good about it. So Amgen, I took an action, I sent alert, I made money, my members made money, and we felt good about it. Why? Because this was a setup. I was talking it right here before this occurred. So when I saw the move, I felt good about it. And I said, okay, I have seen it before, and it can easily break this resistance. This is the resistance level right here, 199, 200. And this is what happened, it broke. So here, right, 1153, took the action. Somewhere here, we took the action around 197, 198. And same day, we sold it. Because why we sold it? Because when the stock moves in a one day, if it moves like twice its ATR, ATR is average true range, so it gets overbought. So when the stock moves twice its ATR or three times the ATR, it gets overbought. And if you are in a good profit, you take your profit, and you can always time your entry on a pullback. I have 12, like 11 services. So all these trades which I discussed, I don't send it to swing service or swing light, but I send them to end of day service. So it's called end of day service, but stock service, but it's actually day service. I send the alert to that service, and at the end is the worksheet is sent. So like I prepared the watch list of 34 stock before talking to you. So I'll just send them today that these are stocks are on my watch list. So you may not have Raveen end of day stock list. So if you want end of day, you can subscribe. It's not that cheap. It's not that expensive. And you can get the bundle of all 11 service for one price. This is Amazon. I showed you the chart of Amazon last week, and I said the entry is coming for Amazon. So at 1,000 level, I said it will go to 2,000. Now my target is 2,500, and I gave you this chart, and I said this is it. It has is sitting at the support level. So I draw the support line, and this is the support line, and any move to the upside, you should go long, and it went up. I don't have a chart. Um, Take a look at Amazon, where it has gone up from 1947 level. APC chart is prepared on Friday. So on Friday, my trade station was not working because it requires data to download. So I could not trade properly on TradeStation. But a stock chart is web-based. So I could access stock charts, and I can send email. So APC is sitting at 200-day moving average. And here's the upwards sloping support line. So APC is on my stock list, watch list. If it breaks above, I will feel good about it because I know my resistance support is here, and it has a chance of going up towards 67 level. So from 63 to 67, let's say I catch it at 64. So from 64 to 67 is 3 point, and who knows if it breaks up. So, and here's my stop, the low of this. So low of around 60.5. So this is just on my watch list. ATVI, so I showed you the chart of ATVI, and I was feeling good about it. I told you that this is, when you see a chart like that, 2-day or 3-day down move, and then one big up day move, you should pull the trigger, and you visualize the path where it will go, create a map. So the map was that, okay, if it breaks this and break 50-day moving average is going up, here's another pit stop. So it's a simple map. And then the complex is that it can come down, pull back, and then go here. This is the resistance level. So, but sometimes the complex path becomes simple because of the buying in the price action, and it just kept going, 81, and we sold right here at 81 level. So ATVI, I don't have a chart, but I did show you on 7th of September that it will go up whenever we met last time, last Sunday, and it hit 81. So I was feeling good about it, and I mentioned it. AVGO, So I showed you this chart. I wanted to buy AVGO at 225 on a pullback on this gap up, but it did not. We had it on a spread service. 240 was the target, and this is what it did. So you see, stock gapped up, then kept going up. Then it pulled back, and it's sitting somewhere here. So I'll look for re-entry and go long on AVGO. This is AXP. I showed you the chart of AXP on the last webinar, and I was feeling good about it based on this hammer, and I said I will pull the trigger, and I did, and this is what it did on 10th, next day, I think Monday, and this is what it's doing now. It's at 109. So I was feeling good about it at 106 level, and I'm still feeling good at 109 level, 109.56. So it's traveling at in uncharted territory. I don't have a weekly chart or monthly, but from the day recent, there's no resistance level on the left side. So my target is 112. So once it goes to 112, I'll take my profit. This is beat. I prepared the chart for beat, and it's a familiar setup. So on 14th of September, you see that this is a hammer. When hammer, the stock bounced back from 50-day moving average, right? And it closed this support line, and now it's gapped up. So the next move up, breaking of this line will take it higher. So this is on my watch list for tomorrow. So keep an eye on beat, and then I'll show you on next Sunday that I showed you beat, and this is what it did. I showed you this, and this is what it did. That's what I will do. So BG, I am showing you the chart of BG. So it's on my watch list. So I'll see what it does. So I'm getting ready. So life is good, right? I prepared this chart of 34 stocks I have. I did not prepare the chart of all 34, probably not, but I have about 34. So life is good. In the morning, I open it and see. But it doesn't mean that I don't look at all other chart stocks. So sometimes the stocks, there was no setup I could identify, but the way the stock is moving, it's showing on the screen. So I look at it, and if I feel good about it, I take action. So once I exhaust my 34 list, then I start looking, because I'm greedy, right? So I say, okay, man, these 34, only one or two moving, and the others are not moving. So what's going on with other 250 stocks I have? So I look at those 250 stocks, and I see, oh, this one is moving. Okay, this one is look good. So I go for that. Although I was not stalking it, but I should not restrict myself from not looking at it, others, right? So I should be flexible. So now BG is bumping its head at 64. So once if it breaks this above, I will go long. And I know that 65 is another quick stop. And my target will be this doji, gap of doji of 68, 60, between 68, 68.50. So this is my target. So it depends how it moves, but it's facing the resistance from this trend line. CME, this is again Friday chart, 14 September. You see, it's sitting at whatever was the resistance, it has become a support. So this resistance became support, and it's sitting at, so I consider it as support at 173. So if I know that this is the support one sitting at 173, this is another support here at 170. So if I know that this is the support and it's sitting at the resistance now becomes support, it's change of polarity. So if it starts moving up, I'll go long on CME. CRM, I showed you the chart of CRM. I mentioned that I'm long on CRM. I was feeling good about it based on this tiny candle. Sometimes the tiny candle give you the clue. It's the big candle which people pay attention to, and but the tiny candles also give you clue, and you need to pay attention. So this tiny clue was telling that CRM has a bottom here, and I felt good about based on this, and I went long, send alert, and this is what CRM did, 153, and it went to 157, 158, and we took the profit. So I don't have a chart, latest chart. So it went here, it hit this trend line of 157. So we are out of CRM calls. So now CTAS is Friday chart. So this is again is on my stock watch list. So what I'm expecting two things. So it's consolidating at the not a pretty chart because it's too many tiny candles on the top. When there are too many tiny candles on the top, the stock can just fall down like as if it doesn't have any leg. So it can gap down. If it gaps down, then I further look at it, what it's doing here. And is it trying to break the 50-day moving average? It can easily bounce back up. So I have to be careful. So it has to gap down with the big force. Some bad news came, but the stock can just go up. So I will feel good about it if it starts to move and have a big candle on this side, like this kind of candle, or at least this candle where my cursor is, or something like a big white candle. It doesn't have to be this big. All I need is just this kind, like $1, 150 move up, anchor this level 216, and I go along. Later it can produce this candle. I will be very happy, this big candle or 1 or 2 day up move. But any candle of $1, 1.5, I will be happy and go long. So either it gaps down and come and sit here at 205, then it is another entry, right? Or if it breaks gap down below 205, then it's a short entry, or it makes this kind of candle $1.50, $2 move up. So chances are it can go, it's going higher. Because so I stack my odd against the trend. So the trend is to the upside. So the trend is to the upside. So why would I think that the trend is that it will fall? So the chances are of falling is low, then chances of going higher. So I would look for the long entry. This is EXPD 14 September. So it's just a giant hand, again a giant hand. The giant hand is holding it on 50-day moving average, and once it starts, so I know 74 is the stop and the most is 73 level. So if it starts moving up, it breaks. This is my resistance 77, and above 77 is a clear path. There's nothing above, just minor here 78. So I will go long. ICE, the ICE is again is also on my list. It broke the resistance and sitting here. So if it starts moving up, I'll go long on ICE because it broke the resistance. You see, it gapped up and it's just sitting here. So any up move, I'll go long. KSU, the Kansas City Southern Corp. So just based on this candle, I will just want to see after this downfall, this candle is neutral. So I want to see what it's doing. So this is forming at the support of this. So I just want to see what it does. If it starts to move up, I'll take my chance. So it has to move up good and crosses the midpoint of this red candle. So once it goes up, I'll go long. MasterCard, I am already long on MasterCard. So when I'm watching MasterCard, I'm watching Visa and other financial. So MasterCard, especially MasterCard, Visa, Square, all these three together. So this is a MasterCard chart. So I felt good about it when I saw the move up from here, I think on 11th of September. And I went long and it broke this line of this resistance. So this is a resistance, a minor resistance. It broke it. I don't have a chart of 14th September, but MasterCard is sitting above this resistance line. So it has a clear path. So I'll see how long I can hold MasterCard. This is NVIDIA. So I'm watching NVIDIA. So NVIDIA has a resistance at 280. I have it in my long-term portfolio. So NVIDIA has a resistance at 280. As soon as it breaks 280, which is like $3.50. So if it breaks with force, I'll go long on NVIDIA. And then there is no resistance to the upside. So NVIDIA is on my watch list. RST is on my watch list. So I see the double support right here, 50-day moving average, 200 days sitting right here. So now all I have to do is watch it and see if the buyers are here. If the buyers are here and it's moving up aggressively, then there's a big gap here. You see the gap all the way to 165. So this is my target gap fill, and I will buy it. December calls, December 150. So I'll buy December 150, and I can create a spread, December 150 and 165. So it could be a 15-point spread, or December 150, 160, or 145 and 160, or 155. I create the spread and hold it. Okay, so RST. This is STT. So STT is sitting again, 14th of September. STT is sitting under the 50-day moving average. So I know when the stock is sitting and moving 50-day moving average, it's a resistance. Now that resistance can be conquered. If the resistance is conquered and it starts to move up, there's a big gap here at 92.50. So I'll go long. I will feel good about it, and I know the path. So I visualize the path. I created the map. The path is to the upside. The map is telling me that this is a resistance here, so it needs to cross another complex map. It's 97.19. There's another stop here. So I created the path in my mind. So, and I know what to see to pull the trigger. If I miss it, I miss it. It's okay. This is target. So target is consolidating at the top. So it has been going down for 4 or 5 days down move. So 4 or 5 down move with this tiny move is just drifting lower and lower. Sometimes the stock just starts drifting lower and lower, and then by the time you see it, it has gone down like 20%. So we shouldn't ignore the lower move, slow move, grinding. But in my case here, what I'm looking at that is sitting as support. So any up move with the volume, I'll go long on target, because 4 or 5, either 3 down day move or 5 down day move, I know it's like a magic. So magic can happen, and its target starts to move. Walmart start to move, Target starts to move, and other something happens, some news comes. So I have it on my watch list. I'll go long. This is TJX. So when on the stock watch list, if the retailers start showing, then I start paying attention. Like 2 or 3 retailers came, or 2 or 3 financials coming, or 2 or 3 crude stocks coming, or some tech stocks start showing up. So when that happens, then it becomes more favorable to watch and put it on the watch list. So TJX. So this is bullish candle after 5, 6 down days. This is the first bullish candle. So I'm just watching TJX. If it starts to move, you can easily make the case for down, gap down. Drift lower and then fill the gap. So there's another case. The bear can say it can go to 101, and I will time my entry at 101. But you can easily make the case that not all the gaps get filled right away. Some gaps take time. So if it moves up with volume, I'll go long. And my stop is below the low this day. This is tree again. This is trying to conquer this support line. So it's just sitting here. So any strong move up, I will go long, knowing this is my support and my stop. So any up move and conquering the 50-day movie, I'll go long on tree. So lending tree. TRV. So you see the TRV, AXP, TRV tree, they are showing up. Especially I like TRV chart. So you see this giant hand again, a giant hand, 50-day. Maybe you can do some programming and show all the stocks which are sitting on 50-day giant hand. Maybe you can do that. So if you program it, good. So this is a giant hand. TRV is sitting on giant hand, 50-day moving average, is clearly telling us that it wants to go up. So this is on my high alert. I will watch, and I have defined the path. First path is it hits this resistance, maybe it comes down, or maybe it conquer it. Once it conquer it, what it does at 131.88. If it crosses that, then what it does here at 132 level. Then once it does that, I go on the left side. I look on the left side. It's like I'm driving a car, but I'm monitoring everything, right? All my mirrors and everything, moving my neck. So I move my neck on the left side, and I see, oh, gap. There's a gap here. So 134. So this is a resistance level. So I need to watch this. So when it goes to 134 and the stock goes up, then I say, okay, what's next? So I see, oh, next is right here. This is 138. So if the stock price is 138, then I say, what is next? So I come here and I say, okay, 140. That's my next. Then I come here, then I say, okay, it's 145. So this is the math, the complex math. I visualize it, and it depends on my trading objective. So your path you create depends on your trading objective, the kind of portfolio you have. What kind of portfolio you have? You have a long-term portfolio, or you have a short-term portfolio, or a mid-term portfolio? What is your objective? Are you trading stocks? Are you trading options? What are you doing? Are you selling calls or buying calls? What are you doing? Or you have puts, or you selling puts? What are you doing? You have a spread. What kind of a spread? So all that goes into that, and that's where the path is determined, right? So the simple path or the complex path. So I'll watch that. Tesla. So Tesla gapped up. So this is a bullish sign when the stock gaps down and gap up. So always a bullish sign when the stock gaps down and gap up. So if the stock gap down and why, and then the next day it gapped up, so you should ask the question, why did it gap up? So this is a bullish sign, but I we should trade according to what the chart is saying. So the chart is saying Tesla is bullish, and this is the support, and it just gapped up. So gap down, gap up, it happened. So this is a bullish sign. So that's first thing. Secondly, I know the resistance is right here at 300 level, so it can just go here. So 15-point move up, and then it can easily come down. So I need to be careful with Tesla. Tesla is all over the place. So it's just on my watch list. No, 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 no. Okay, it's not on 14. This is the 10th of September chart. Sorry. Do I have? Okay. I don't even know what happened on 14th of September. This is the 10th of September chart. So let me see. You can open the chart. Yeah, all sessions are being recorded. So and all recordings are sent next day around like 7 a.m. 7 8 a.m. Pacific time. So all recordings. So it comes from a different system, not directly from me. It comes from another system. So you can look at the Tesla chart. So I forgot to prepare the uh, latest chart. So I'm just opening my system. I'm not opening my system. I'm opening the stock chart just to see what Tesla did. So you can open the stock chart and see what Tesla did. Okay, yes. So it's sitting at 295. So I missed it. Yes. So 295 right now. So you see, when the stock gaps down and then gap up, there's a clear buy signal that day. Boom, you should buy it. Don't wait for it because that's a very bullish signal. Gap down, gap up. Or if the stock gap up and gap down. So if the stock gap up and then gap down, then you should ask question, hey, yesterday it gapped up, today it gapped down. What happened? So I'm going short or exit from your long position. Or if you're short and it stock gap down and you did not take profit and it gapped up, you should exit and reverse your position. So simple rule. If you follow this rule, you can make money. So 285. So because your stop is defined, so always look for where is your exit. So if it gapped up, you went long, and here's your exit at 270 level right here. So if it comes back down, you need to exit and then re-enter later. So entry in the trade is different than re-entry. So entry and then exit and then re-entry. So then you can re-enter. So first, try to protect and then worry about getting in again. So it's sitting at 295. So 300 is the resistance here. I don't have a chart, but you can see on your platform. It's sitting at 295.20. UNH, so I like UNH. Again, it's the same recipe. I have same like 20 recipe in my cabinet, right? Kitchen cabinet. I just pull depending on what I cook. So this is my mom is visiting tomorrow, so I'll be having yummy dishes for 2 weeks. So anyway, so this is the 50-day moving average rising, and it's sitting as support, and it bounced up. So UNH, when it bounced up like that, you should visualize, you should feel good about it and pull the trigger. because you know where is your stop. As soon as you find out where is your stop, you should take the trade. If you clearly see the stop, you take the trade. So I'm feeling good about it. I have UNH and my target is 270, 271. This is UPS. So UPS, I'm not in it. So for FedEx, I had FedEx in my leap service. So I have a leap option service. So now you say I did not get FedEx. So, well, you are not in a leap option service. That's why you didn't get FedEx. So we traded FedEx in leap option service and we made money. So when you are trading, when you look at FedEx, look at UPS and see what's going on. So UPS is FedEx is going one way and UPS is going the other way. So they are not behaving the same way. So UPS, because of this downfall and then just this bullish candle, a little candle at the support level, I put it on my watch list to see what it does next. Usually I'll show you the chart when this happened, 2 or 3 more down days or sideways days, and then the stock takes off. So watch for 2 or 3 days of side move, and then the stock takes off to the upside. And if it does the downside, then you know this is your support. So watch UPS. Valero. So Valero, I showed you, I was feeling good about it right here because 50-day moving average and this support trend line. So when there is a support under the support, you should say, wow, good, double support. So it's like double padding, support under the support. So this is a giant hand. Once again, 50-day moving average giant hand is playing its role. And Valero was good. I sent alert. I told you that I'm going to buy and I hold Valero call. And it depends what the crew does. And I spend so much money on this gas station. They are everywhere, and I'm just buying from them. And so this is doing its thing. So slow, 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 and then 1, 2 up, move up day, and it will go to 120. So I define the path. So I know the path, simple path, complex path. I know the path it's taking. So this is the path it's taking to the upside, and chances are it will hit its head here 120 level. If it crosses, then 125 is the target. And this candle, bearish candle sitting here, is telling me that this is the ultimate resistance. This is where I need to watch. So this on the right side, if I move my hand on the right side, so this is the zone here, sell zone. This is where the suppliers are sitting. You see this bearish candle and how it moved to 101, 102. So this is what I teach in my 7-month coaching program. This is workday. So workday, you should be able to convert your position from down. If you have a put, you should, if you see clear signal, you for long, you go long. If you're long and you see the clear signal to the downside, you close your long side, go to the short side. We had entry on the, I have an earning service. Now you will say I didn't get earned workday puts for why did I get it? Because you may not be part of earning service. In earning service, we just trade long calls and long puts. We don't do strangle and straddle, and we have a very good ratio. So workday, when I saw this, the next day was aftermarket was earning. So I sent alert to buy puts for $1.30, and this is the crash happened. Sold the puts for $4. Then for 2 days, it's just set right here, and this looked like it will break this candle. So ideally, you should wait for the break of this, confirm to the downside, then another sell signal comes. Otherwise, this is called rising three method, and it failed. So there was no puts trade. So if there's no puts trade, is there any call trade? So you ask that. So if you are stalking it, stock, and then when you see the entry, you go long. So we went long on workday, and it hit 153 on Friday. So it just went back there at this resistance level. If it crosses this resistance, then it's going to make a new high, and this is the path. It will break this resistance line, and it will just keep going up and up and up. So on earning, it fell like this on earning beat, and then set on the sideline, and then it's defining its path. So I don't have a 14th September chart. It's sitting at 153. One of my members sent me alert asking me what to do. So I told him, show me the chart. I don't have a chart. I was driving. So he sent me the chart. So I told him to take at least half a profit because it was sitting right here at 153. So the entry came here, partial exit is here at this level. And then break to the upside, you hold it for more profit. So this is for all the charts I prepared. Next webinar is on 30th. I'll show you the Dow Jones chart. So Dow Jones is moving up, is in uptrend, and 28,000 is the target. It will get there. S&P, my S&P target is 3120. So this is the resistance level here. It's just drifting to the upside. Market is bullish, but slow. So it's 3100. So I know now, based on this, I know 2970. This is a resistance line here, 2970, because I projected it based on this line. So whatever this line is, maybe 3000 is the resistance, and then once it's 3000 is crossed, it's 3120 is the target. Nasdaq is sitting at the support. So Nasdaq is sitting at support. This is the resistance level here. Russell is also sitting at support. It's bumping its head here and it's at support. So I know based on drawing this line that it has a resistance at some level here. So this is it, and I have a 75-minute session. I have a 7-month program. So 7-month program for coaching, and in order to know what is this the 7-month program is all about, you need to send me an email, and then we will talk for 75 minutes. All of you will receive the recording for this, so you don't have to ask me, you don't have to request. It's all automatic. You receive it tomorrow at 7 a.m. between 7 and 8 p.m. Just keep an eye on your email, and if you missed all your previous recording or session, I'm sorry about it. I don't have it. Take a look at all your emails, so I won't be able to send it. So all emails, all recordings go at 7, 8 p.m. And if you are not a member of Swing Option Service, you take a trial for 2 weeks, $27. And if you like it, you continue. If you don't like it, you don't have to ask my permission to cancel. Some members ask my permission. Can I cancel, please? Give me your permission. I say you have full permission to cancel anytime. So you can cancel anytime. Just don't ask me. Just log into the PayPal. So you risk $27 for 2 weeks. Just do the paper trading and see how I perform. And if you like it, you take the service to the next level. And I have 11 services. So if you are interested in finding out more, just send us email, and someone from my team will get back to you. And the next webinar is on 30th. But if I get the time, I will teach in between. And if you have any questions, send me an email at askus@financialmarketwizard.com. And we also have a free Facebook group. It's a public group. If you're not a member, you should be a member. I don't know why you're not a member. If you're not, and you are here in webinar, because you will learn a lot. There are a lot of great traders in that Facebook group. They contribute freely without charging anything. So you should be a member and you should ask questions and learn. And I thank you for coming today. Thank you. And if you have any topic you want to discuss or want to hear, please give me the topic and I'll try to do my best and prepare the session on that topic. All right, so I'll see you on 30th. Otherwise, you may receive a notice before and I will teach you something. Thank you for coming. Bye.